All right, we are live. Good morning, everybody. Welcome back to another Monday morning market open. Monday, July 18th. We are very close to September. I like September a lot. The summer's cool, but I like getting back into September, December. That's my favorite time of the year. And well, we are close. We are just 12 days away, 13 days away from August. And then once August is done, we are in my favorite time of the year. So, yes, that is the case. Now, it is Monday, 9:25. Market is opening in 5 minutes. The market has been pumping pretty substantially, I would say, at least Bitcoin for sure. Bitcoin is at 22,000. I'm going to be sharing my screen right now, which is quite, um, I would say phenomenal just in terms of where it's at. So let's open a Webull right now. Here we go. Bitcoin. Let's go to Bitcoin. Bitcoin at 22,000, not even 21,000 anymore. Bitcoin is up. Glitch Life morning. Thank you for being here. And Bitcoin is pumping. Bitcoin was struggling to stay above 19, even 18.5 last week. Now it is up. S&P 500 is also up. Everything's up in the pre-market. S&P is up at 388. S&P away from $5 from its latest high of 390. That was the high it got to after it bumped at 360. Everything's up. The entire market is up. So there is a little bit of a feeling here. We have Tesla up as well, that the market is factoring in that earnings might be good. Now, maybe earnings are bad and the market's going to be like, frick it. The earnings are not going to stay as strong as, like, they're going to collapse because of earnings. Or they're considering that earnings are going to be okay and that inflation doesn't matter and that inflation has peaked and we're going to be moving forward from there. Z-Talk's best way to start the morning. I appreciate you. Thank you for being here. Aaron, yo, like the market. Yes. So market is pretty interesting just in terms of how it's reacting right now. I didn't expect for it to necessarily be up today. I saw Bitcoin pumping yesterday and I was like, oh, interesting. I don't know why, but it's continuing to do that. Ethereum up 10% as well, 1,400. So if you bought Ethereum yesterday, you would be up 10% on your money. This is why crypto is so speculative and so, what does it mean? Now, I personally think that this is the type of speculation I don't want to bet on because as easy as it goes 10% up, there is a very, very mean 10 to 20% down randomly, and you don't know when that happens. So you have to be willing to hold for the long term and like believe in what you're holding. And most people, they don't when it comes to crypto. But when you see 6% gains on your Bitcoin in one day, when the stock market can barely give you, half a percentage point, it is tempting to say the least for a lot of people when it comes to doing this. Ken Yomit, love the content. Ethereum, Joel, you've got some ETH, so I'm happy for you. Those ETH bags are up and getting a lot more better. What up, Theo? Happy Monday. Glitch Life says earnings are going to be mediocre to good and the market will rebound because it's not as bad as expected. A lot of companies will miss by multiple percent and will rally. Yeah, it's going to be interesting. Snapchat also has their earnings this week, and I'm going to be very curious to see how Snapchat does because, well, it's Snapchat, and they guided that their Q2 earnings would suck, and that's why their stock went from 20 to 13 or to 11. This was like a month ago. I remember I was driving when that news came out, but I'm going to be interesting to see what's happening. Netflix is reportedly spending $200 million on a new film as well. Oh, this thing is not sharing. Netflix is spending $200 million on a new film with Ryan Gosling, and it has some like Avenger people directors, and they're hoping that's going to bring in more subscribers, which is going to be interesting. Yo, Amit, did you get my email? Yes, Samarth, I got your email. I'm going to respond to you today. I will be responding to you today. Richard, hey, watching from work. Appreciate you watching from work, Richard. Means the world. Everclear, what's up? If earnings are better than expected, it'll say a lot about the cause of inflation. Yes, that is also true, because theoretically, we should be having a little bit more bad earnings and demand destruction, and therefore deflation. But if earnings are phenomenal, that means companies are still continuing to spend, which, but granted, I don't think earnings are going to be phenomenal. I think they're going to be, like, as Glitch Life said, better than expected, but not amazing. Not as horrible as most people are factoring in. Netflix is 189. They already said expect to lose 2 million subs, which is happening. So 2 million subscribers will be lost. The question is, how's the market going to react to that? I mean, if you already told them, hey, we're going to lose 2 million subs, theoretically, the market should not go crazy about that. But nonetheless, that is what it is. Okay. Sorry if you mentioned. Good morning, Mitch. Just watch your Q2 session. Thank you for that. The Q2 earnings release isn't out yet. The Palantir Q2 earnings actually isn't out yet. The day. So that's not there. But we were just hypothetically speculating on when it's going to come, but eventually we are going to know. Okay, so the funny thing is the market is open. I don't have my cowbell with me right now. I just literally don't have it. So I'm trying to look up on YouTube. Is there a cowbell sound? Is there a cowbell sound? All right, here we go. We're gonna play the cowbell sound while the market opens. Okay, here we go. Let's see. Let's see if you guys hear this and this works. All right, there it is. The market is open. This is such a horrible cowbell. Oh my gosh. That cowbell sucked, by the way. That cowbell. So this is why I use my cow. I literally just don't have it. I left it somewhere, but all right. Well, the market is open. Let's see what's going on. Here we go. Let's go to Tesla. Tesla 733. Wow, nice pump from the pre-market at 720. Not bad at all. Palantir up 927. This bad boy was at 890, 860 last week. So that's doing well. S&P $2 away from 390. And when you're at 390, you're just $10 away from 400. And if it rallies to 400, that would be quite interesting if it rallies up to 400. Spotify at 104. Open Door is still stuck down at 512. Open Door needs to figure it out. Google split is in effect, $113. There's a 20-1 split. Was at a low of 102. So we're going to see high of 152. So we're going to see how Google interacts at this 113. And keeping going from there. End phase at 200. Nvidia crosses 160. Not bad. Nvidia was stuck at 140 for a while. Okay. Wow. Nvidia was 115. Oh no, that was in 2021. Okay. So still hasn't reached those 2021 lows. Streamed that legendary SNL More Cowbell segment. Not the same. Yeah, it sucked, bro. That thing definitely sucked. Keep cool and put cash aside for future buys. Yes, I agree. It took me straight to the Swiss Alps. That's actually funny because my mom is there right now. She's in Switzerland. Okay, so that's what we've got on NVIDIA. Roku at 88. Let's look at ARC. What's ARC doing? ARC 45 for ARC, up 2.7%. Okay, not bad at all for ARC. Amazon, you've got at 115. Coinbase at 58. Coinbase should be, up 8%. Makes sense. Crypto's up, so Coinbase definitely should be up. Breaking news from CNBC. The Dow has advanced more than 200 points to kick off a busy week of earnings, which makes sense. Earnings is going to be interesting this week. We're going to see a lot of stuff. Look at Netflix pumping all the way up to 200. I wonder how the market's really going to take Netflix, because if they know we're supposed to lose 2 million subs, but if they see the 2 million subs and they're just like, I don't know, they're just like, yeah, that sucks. That's horrible. We're going to dump the stock. Then that's crazy. Or they're going to be like, yeah, we expected that. So that's not a big deal. Meta earnings are not this week. They're the week after. I'm very interested in Facebook earnings because Zucks has been talking about the worst economic downturn. I'm like, all right, so are you guys losing ad money? Like, what's actually going on here? How is this happening right now? What are we going to see? So that's that. Robinhood. Remember, FTX has bought 7% of Robinhood. We still don't know any news that's going to come out of that. Robinhood IPO'd at $38. Now it's at $8.73. Went to a high of $85. That's when Kathy was buying it as well. So Robinhood is one of those stocks that either is a phenomenal arbitrage right now, and over the next couple months, if we have a rally, it's going to go up, or it's not. And we're going to see what happens. Now, again, if you believe in technicals and the RSIs are kind of the relative strength indices on the market itself could be theoretically oversold, you would imagine that if inflation has peaked and things just cannot get lower and lower, then we do see a call it bear market rally to the S&P at around 450, which is the last time the price was when the 2-year and 10-year yield curves inverted. So that is one hypothesis for how this rally would ensure over the next 6 months, and then the actual crash would happen. But it's interesting because almost everyone you talk to in terms of economics and JP Morgan, it's not sharing. That's weird. They say that it's, let me share this again. They say that it is like just guaranteed that there's going to be a recession, that it's almost impossible to deny that there would be a recession. The question is when, right? The question is it now? Is it after a bear market rally? Is it before? And we have got to see then. Let me go onto YouTube and I'll share some stuff with that. I don't know why my StreamYard thing was not working. Good morning. Good morning. Good morning. All right, let's go to CNBC and let's see what's going on. Also, the Twitter case has got interesting. It's looking like it's going to be Elon winning because they just had a horrible. Let me show you guys this horrible admission. So here we go. Let me share this real quick. This thing was insane. When I found out about this, I was like, wow. All right. So on April, this is from the actual court filing. On April 28th, just 3 days after signing the agreement, Twitter restated 3 years of its MDAU numbers. Remember, this is after the agreement, despite never disclosing the issue to defendants pre-signing. So Twitter did not disclose their monthly daily active user numbers before this. And now you could say Elon probably should have asked for that, but nonetheless. Post-signing, defendants promptly sought to understand Twitter's process for identifying fake or spam accounts. In a May 6th meeting with Twitter execs, Musk was flabbergasted to learn, they use the word flabbergasted, to learn just how meager Twitter's process was. Human reviewers randomly sampled 100 accounts per day, less than 0.00005% of daily users, and applied unidentified standards to somehow conclude every quarter for nearly 3 years that fewer than 5% of Twitter users were false or spam. That's it. No automation, no AI, no machine learning. When I saw this, I was like, oh my goodness, I think he's going to get away with this. Because you think about this, it's like, okay, you think about a company like Twitter that's supposed to be one of the most unique technology companies in the world, just given the amount of content and data that they have. They are using nothing to figure out if someone is a bot other than sampling 100 accounts. And that makes no sense because you have 200 million daily active users. So what you should be doing is attaching like the keywords that scammer use, which is like join my Telegram or my WhatsApp or all this random nonsense, run that through a script and then run that through millions of accounts and then come to conclusions on how many of those are fake and then apply those standards. That's more realistic than assuming 5% of Twitter users are fake for this human curated methodology. And the reason obviously they're doing this is because you would think they think that there are more bots and they don't want to tell advertisers that because that means less ad revenue, which is obviously bad for Twitter and the company, which is why they're kind of hiding it. But that was incredibly interesting to learn just as a pure revelation. I did not expect that at all. Did not expect that. Okay, let's what are we going? Let's go to this video talking about earnings. We're going to hear this one. Okay, here we go. We're going to hear about earnings season. Let's play this real quick and then we'll move on. Yeah, that methodology was ridiculous. It's not even like it's actually insane. All right.
Did you feel better about what you saw at the end of the week last week on Friday? Does that make you feel as though you want to put a shopping list to work?
Well, Friday was a nice indication because you had earnings season start off with the banks, and banks generally were okay to mix, but the market looked through the negatives and really focused on the positives. So you had a lot of banks rally. So the hope is that earnings season isn't going to be blockbuster, but rather the market is going to take it in stride and look toward the next 6 to 12 months. If that's the case, we're feeling pretty good about stocks. So we would be buying any sort of weakness. We wouldn't chase days like today, but we do think a year from now, stocks are going to be significantly higher. Now's a good time to start to look at playing offense rather than defense.
All right, so if it's offense rather than defense, where is the offense that you want to play? And are those offensive parts of the market that you want to buy into contingent upon Fed policy?
Well, we think inflation is definitely starting to break. The Fed is not going to talk about changing their policy or being less hawkish like next year yet, but we're seeing commodity prices come down. We're seeing labor wage inflation come down. Real estate prices are slowing. You're going to see Walmart and Target discounting because they've got this excess inventory in apparel and home goods. So we think inflation is going to start to go lower. That's going to allow the Fed to be less hawkish next year. That's pretty bullish for stocks. And you want to buy stocks 6 months in advance to really starting to see those numbers turn. We think that's time is about now.
All right, so that 6 to 12 month time frame that you're talking about lends itself to what kind of trade Is it technology and media and communication services, or are you going to stick with kind of what's been working-ish? And I say ish because energy was great for the last 12 months, except for the last maybe 3.
So we're expecting rotation. So things like consumer staples, which have done exceptionally well, probably is a source of funds. We'd be putting money into financials, technology, communication services.
So basically, a lot of people, including that guy on Wall Street, is like, look, we think it's going to be okay. We think things are going well, and we're kind of putting our money to use, which is interesting to see, because if the rest of the market feels like that, then we're going to have a bear market rally, and then maybe then there's a crash. But a lot of people are still saying S&P to 3,000, and we're going to see if that happens. When is the next Can You Learn to Speak My Guy podcast? It should be today around 3 p.m. So definitely keep an eye out for that. If you want to go to that channel, just YouTube Can You Learn to Speak My Guy. Amit, is that a new haircut or just bedhead? It's I actually did get my beard done. You guys can see the little line. So it is a little bit of a haircut, but it's probably also bedhead. All right, let's go to Tesla earnings preview. Here we go. Let's share an article and let's talk about Tesla. Blake, it's the Peacock tribute, his favorite streaming service. You guys are funny, yo. All right, Tesla earnings. Tesla is scheduled to report earnings on Wednesday after the bell, with Wall Street worried it will be a difficult quarter for the electric vehicle maker amid ongoing supply chain snags and pandemic-related factory shutdowns. We know the Shanghai shutdowns were there. That resulted in less manufacturing. Now, the deliveries were about 254,000, which was some of the best deliveries they've ever had, even though people thought it could have been more. So it'll be interesting to see how the market reacts to it. Some of the issues facing Tesla are already accounted for in Wall Street estimates, and investors are aware. He expects Tesla to modestly beat expectations thanks to reduced costs and relatively strong margins, which is one of the beautiful things about Tesla. I think they have like 30% margins, which is insane for car companies. You don't get that. Oh, like most car companies do not get 30% on every dollar they get to keep. Analysts expected adjusted earnings of $1.81 a share, which would compare with adjusting earnings of $1.45 a share in the second quarter of 2021, which is a pretty nice increase year over year if you look at it. Estimize, a crowdsourcing platform, says that they might be expecting an adjusted profit of $2.07 a share. They are also estimating sales of $16 billion for Tesla, which would compare to $12 billion in the second quarter of 2021. So that's $4 billion more than Q2 2021. And they're expecting 17.2 billion. So two different firms are saying either it's 16.6 billion or 17.2 billion in terms of revenue. Now, stock price. Tesla shares have underperformed the broader index, losing about 34% this year compared with a loss of about 21%. In the past 12 months, however, Tesla stock outperforms the broader index. It has gained 7% in the time where the S&P is down 21%. So if you bought Tesla before the S&P, you would be up in over the past year, contrasting with losses of about 14% for the S&P 500. So even though Tesla's been down, it's still been a better stock than a lot of the other stocks. It's one of those pandemic stocks that hasn't fully declined, right? And when I mean pandemic stocks, I mean like it had a exponential rise during the pandemic, got up to 1,200, more than $1 trillion company. And it's come down, but not, it's still a $700 billion company. It's not come down to the point where it's like Robinhood down 80% or something, which is like Zoom and most of these pandemic companies that have happened. Concerns about the state of the U.S. economy are also likely to factor into Wall Street's expectations. The company filed layoff notices in California, recently affected about 230 employees. This represents the latest series of layoffs as Tesla looks to scale back its salaried headcount by about 10% globally, or cut 3.5% of its workforce. The layoffs are expected to occur over the next 3 months in anticipation of a coming recession. So again, like although we may see some bear market rally or whatever it may be, the market is definitely expecting that there's going to be a bit of a recession. It's just a question of when that's going to happen. It's greater than 30% in China, but by a lot closer to 50%. Yep, I agree. Tesla has unlimited demand for its products and services. This is true. And I remember in like April 2019, when the market was still saying that there was no demand for Tesla, that's when it dropped to 170 post-split. I was buying it, or sorry, pre-split, pre-many splits, actually. And I was buying it during that time. But that's not happening anymore. So, the market doesn't feel like the way. Palantir and Tesla, I'm waiting for their earnings reports by doing many more buying. That makes sense as well. It's always a good time to buy Palantir, but I could wait for earnings. Palantir always dips on earnings growth. Yeah, so what Palantir earnings, like the SPAC losses, I heard they're going to take some more losses on the SPACs. And as a result of that, that's going to cause us to miss earnings per share. But also revenue, there is a world in which they're expecting 470. We might hit 500 just in the context of the government sector, given they said expect significant volatility to upside. If the government does really well, just in terms of the Ukraine stuff and all the things they're doing with defense, they've got a lot of deals over the past 6 months. I've been covering a lot of them on dailypalantir.com as well, if you want to keep up with it. So it seems very likely that we beat Rev. I don't think we beat earnings per se or earnings per share. And if that happens, it's like, okay, that's whatever, because the macro sucks anyway. We could do $1 trillion in revenue and the market's going to be like, yeah, it's the inflation, right? So to me, I'm just like, we can have a couple of crappy more quarters once inflation gets down to 5-6%, which hopefully in the next, you would say 12 months that happens, which again, even that's a long shot for this to see that to happen. Then we have a much better shot of going forward. So we're going to see. Alex Karp stated in a press meeting to expect significant volatility to the upside on this earnings report. Yeah, I mean, I believe him, but I don't know what's gonna happen. I also want to see if he gives us a monologue, bro. If he gives us a monologue, that'll be like absolutely hilarious. It's like, dear shareholders, you know, he's a funny dude. All right, let's go back to here we go. We are going to hear Jim Cramer talk about what he thinks about big bank earnings. Let's open up this one. Gas prices are coming down a little bit. It's $3.99 average now. Let me know where you guys are and what's your average. Mine hasn't come down to $3.99 yet. I've seen about $4.40, but that's better than $4.90. So let me know wherever you're at, whether it's in the States or international. How much are you still paying for gas? Leave it in the chat, and I'll discuss right after this.
Jim Cramer, Mad Money from the NYSE, kicks off tonight at 6 p.m. Eastern Time with Ken Langone and Goldman Sachs CEO David Solomon. That should be interesting. Jim, you're at home there. This is a move for Mad Money, but not much of a move for you. You're there every morning.
No, I've been here for 40 years. This is where I started, and I feel like it is home. What I like about it is that I think that I can more relevant guests. It's just a lot easier. I want the closing bell to be incredibly important. It's always been good, but we want to take it up a notch. And I've got an unbelievable staff here, and we have an amazing team. So, you know, Mark Hoffman all the way down. Everybody is fabulous, and they've been working round the clock to make this work, and I'm really proud of the team.
Be watching it. That's Langone. That should be interesting. See if you can get him.
You know, I love him. I hope he brings the Langone. Right, we got to bring Langone.
Try and get him out of his shell, and see if you can get some real comments from Jim. What happened Friday? And both of us have been. I don't know. I said I don't want to just be optimistic because I like it, you know, when the wealth effect is better. And more, nobody loves bear markets, obviously, but I don't want it to be that. I think that so many stocks are down so far that I'm not sure we need that big 40 VIX capitulation. And you've been kind of saying the same thing. That was impressive on Friday because what caused Friday? What really happened? Nothing really happened. It was a hot.
Well, I'm with you. Wells Fargo. It was an amazing quarter, frankly. They made so much money. Truly impressive. The Citi blew me away. When was the last time we had a number from Citi that was extraordinary? That made us feel that don't take your cue from J.P. Morgan. Take your cue from Morgan Stanley. We're seeing unbelievable bank numbers, and people have to accept the fact that the consumer is so strong. Now, yes, okay, so the Fed has to slow down the consumer, but Joe, we're just not seeing recession. We're seeing what we need to see, which is a legitimate slowdown. I think ultimately a slowdown in inflation. And I celebrate this. I don't root for a recession like so many people. They look at the yield curve and they say, we're going to have a big.
Real quick, it's not about rooting for a recession. It's about what is necessary to induce demand destruction to decrease inflation. Because remember, inflation affects the middle class the most, and people who are living paycheck to paycheck. So if Cramer is right that inflation is naturally going down, even though he has a different theory than Cathie Wood believes it's inventories that are causing the massive amounts of supply, which reduces demand, which reduces prices. He thinks it's more in the commodity side, kind of the same theory, but just in a different world. Then yes, we don't need a recession to get inflation to go down. And that's perfect because then the Fed doesn't have to raise interest rates and then tech valuations don't have to go down and the market can rally. But if inflation continues to be the way it is, then you kind of need something. Right. And the Fed can't raise interest rates because we have way too much debt, like to the level of like Paul Volcker in 20% in the 1980s. So we've got to ultimately see what happens. And hopefully I would hope Cramer is right about this because that would save people a lot of pain and be good. But I guess we got to see what happens.
Big recession. I think you and I both know that the stocks reflect a lot of negativity and not a lot of positives.
I'm still struggling with when we're dealing with inflation and the Fed is gonna have to do its job. Do we want the backdrop to be a really good economy or a really bad economy? So when we have good jobs numbers and when we have good retail sales and it looks like the consumer's still going well, I think that gives the Fed leeway to raise rates and maybe hit that soft landing sweet spot easier than if we were already in a really bad economy, which is what the stock market, at least that's the signal it was sending, that we were almost already in a recession or that one was imminent. And I don't know, I'm not convinced that's the case.
The stock market believes that the consumer is shot, that loan is just shooting up. It's actually the opposite. Steady loan growth. The consumer is very strong. That's why the consumer is spending. Maybe they cut back some spending. That was the retail sales when people dived into it. They realized, wow, you know what? After some adjustments, it's not that strong. I think this allows J. Powell to do 3 quarters. He goes. Now, Greg Hayes this morning from Raytheon did say, look, we got to slow this thing down. We need more engineers, and we just can't make it happen.
Yeah.
It's industrial America that is
Good problem
shy.
to have, though.
Industrial America.
In demand, good problem. I'm hoping that we're in September or whenever, and we look back and go, yeah, we did it again.
A lot of you in the chat that are saying Cramer is kind of a little bipolar, sell, buy. I can't agree with you even more, man. The amount of clips I've seen of him saying, Kathy's horrible, Kathy's a genius, ARK is this, Coinbase 475, crypto is worthless. I get he's an entertainer, but you can't pin him down. I mean, that's why it's hard to take him seriously right now, because he's so excited. Like, imagine if the market was down 3% today. He would have some narrative in his mind for why things are horrible, because he has to, right? He's a daily anchor. I get it. But it's also hard to get him to have an opinion because he's so all over the place and he just acts the way the market goes. A lot of you are saying still a little bit of $5 in Portland and northern Illinois, 360 in South Carolina. Man, what would I do to see 360 again? 549 San Diego, 479 Detroit. So still gas prices are still up for a lot of people. As Elon says, he's a simulation. Yeah, that is interesting. I mean, the guy just you cannot pin him down. Okay, so every time I share my screen right now, it's a black screen. I don't know why. I'm trying to share Webull, but Webull just becomes a black screen. But yeah, I'm gonna have to share something else to show you guys my stocks. Goldman Sachs, they just released earnings. Oh yeah, here we go. Let's share this. Okay, so instead of sharing the stock price, I'll just share this article. Wow, I did not know Goldman Sachs had earnings. Here we go. Okay, Goldman Sachs crushes analyst expectations on strong bond trading. Shares rise 3%. Second quarter profit fell 48% to $2.79 billion, $7.30 a share. Revenue fell 23% to $11 billion, which was a full $1 billion more than analysts had expected. So revenue fell 23%, but it was still $1 billion more than what analysts expected. I think this is what Glitch Life in the chat was saying. They were saying that, look, inflation, the earnings are not going to be amazing, but companies are still going to rally because it's better than the worst case that analysts have expected. Fixed income operations, $3.6 billion in revenue, topping the $2.89 billion street account estimate. That's the other thing. It's about these estimates. Is this concept of over delivering, under promising. There is nowhere more true. There's nowhere where that is more true than Wall Street. Over promise and under deliver. So look, second quarter profit fell 48%. 50% down their profit, and they're rallying right now, or at least it's up 3%. It's not down, 5%. CEO says we delivered solid results in the second quarter as clients turn to us for our expertise and execution in these challenging markets. This is interesting because if Goldman Sachs is doing well during this time, it really makes you think about the probability of a recession in the next 6 to 7 months. Do we end the year with this 450, 470 rally on the S&P? We started the S&P at 478. Do we just go 0% for the year and we're back to 478, but we hit a low of 360? Because Goldman's not doing bad. They have people putting money in that bank. They're getting revenue. Goldman said investment banking revenue dropped 41% to $2.14 billion, slightly higher than the $2.7 billion estimate. Again, beating estimates. And that'll be interesting if that happens for Tesla, Netflix, and Snapchat this week, and for Facebook next week. It's going to be incredibly earning to see how this happens. Their consumer and wealth management revenue rose 25% to $2 billion, essentially matching analyst estimates on rising management fees, credit card balances, and deposits in digital banking businesses. So consumer management is going up. Consumers aren't taking their money out. Consumers are actually still trying to invest their money and spend their money. That's why they're paying Goldman Sachs to manage their money at the end of the day. Very, 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 very interesting. Dogecoin is moving. Palantir and Tesla are up 4%. Wow. Wow. Cramer was the biggest Tesla bear until it ran, and then yeah, that is also true. There are many clips of him shitting on Tesla, and then Tesla's up. Wow. Okay, cool. Not bad, guys. I think that is it for the market open. Thank you all for being here. 166 of you. Really appreciate it. July 27th, next week. Going to be a very, very interesting night. I will probably be doing late night stock talks tonight around 11 p.m. So if you're here 11 p.m., make sure you join. And we're just going to talk stocks and anything else that comes up in that late night session, usually philosophy, stuff like that. Thank you guys so much for joining. It's a really interesting market. I have a couple of videos coming out later today talking about this. It's very interesting. It's looking like the market's factoring that inflation is going to peak, that the Fed is going to bump 75 versus 100, and they're okay with that. And they're expecting earnings to not be amazing, but are expecting it to not be horrible as well. And as a result of that, we are going to see what happens. Amit, you always keep us up. That is my goal. That is my goal. Thank you guys so much for joining. I will see you guys hopefully tonight around 11 p.m. if you're free. And if not, tomorrow morning, 9:20 a.m., I will see you again. Nice 0 to 1 book in the background. Yes, one of the best business books ever. All right, guys. See you later.